Hello and welcome to LeisureCast. My name is Brian Krogsgaard. Today we've got a guest, Brad, known as AltgoinOG on Twitter. Brad, you're going through your second market cycle, but you were a self-proclaimed noob in the 2017-2018 market, and we're going to learn about what you've learned and how it's different being on the front end of a bull market rather than the tail end of a prior market and everything in between. Before we get to that, this episode is brought to you by Token Sets. Go to ledgerstatus.com/sets and you can check out Token Sets. Go to ledgerstatus.com/tulip and you can check out the Tulip token set, which is one that I created, and we're trading along, chugging along, having fun. It is a really great and fascinating protocol that allows anyone to create a set and then manage the funds in it. And it can be passive or active. There's many different ways to do it, but it's asset management simplified. I've had a ton of fun experimenting with it. You can create your own set, or you can see what others are out there. They even have the DeFi Pulse Index, which is one of the most popular DeFi indexes. Or I guess it is the most popular DeFi index that you can passively invest in DeFi through. So thanks to Token Sets for being a Ledger Status partner. Brad, welcome.
Yeah, thanks for having me, man. It's good to be on this side of the podcast for once.
Yeah, I mean, I appreciate you being here as a listener. And, you know, I forget, I think maybe I was reaching out. It's been months we've been trying to get this going because my schedule's been messed up. But I was looking for the perspectives of like somebody that's kind of experiencing this run up for the first time, especially if you kind of know what you're doing a little bit more this time. And you sent me a kind of a message laid bare a bit saying you got into crypto in 2017, right? When in 2017 did you first when did you first start investing in crypto in 2017?
Oh, middle December, man.
Oh,
Yeah,
okay. So
days.
it was like the very end.
Very end, yeah.
Did you
Bitcoin hit 20K and then I hopped in.
Were you going to Bitcoin first and then, or did you go straight to altcoins?
No, of course, because I couldn't buy a whole Bitcoin, right? So I had to find something cheaper. So yeah, my story basically was that I saw Bitcoin went crazy, and of course I regretted not buying it in 2014 when I first found out about it. And I have a vague recollection. Maybe I bought a few and put it on a laptop that since I had thrown away, but just pointless to think about that. I'll just make myself angry. But no, so I bought a Litecoin for $99 and yeah. And then Coinbase at the time locked it up for like a week. And so in that week, I would have sold it at $115, right? But they locked it up for a week. And so it went up to 400 or something. And by the time I could sell, it was at 400. So I sold it. And then I went online, Googling.
Most dangerous thing for a new person is to feel like a genius on your first trade, right?
Oh, I'm telling you. So it gets better. I went on Google and I was like, what's the next Bitcoin, right? Like you do.
Nice.
And so of course what popped up was XRP. And so I took my $400 and I bought a bunch of XRP at like 20 cents or whatever it was. And then it went up to $3 and I sold it. I felt like a freaking genius.
Yeah.
And of course that was the worst thing that could possibly happen because I just spent the next 3 years putting more money in and losing it.
So let's start with, where did things start to go wrong? If people, there's a lot of new listeners to the podcast, and for what it's worth, within regards to where we are in the cycle, I don't think it's the same as like December 2017, which was really almost like the exit pump on a lot of altcoins that had already performed really well at another point in the prior year. But nevertheless, we do have a lot of people that are new, seeing a lot of gains, think they're a genius, or people like me who like are having a good run, and you can get overconfident.
Yeah.
Where did things start going wrong? When did you realize it?
Oh man, I probably didn't. It didn't sink in that I was in the beginnings of a bear market for like a good 6 months, right? Because you have people that got to their height of their portfolio, and they have all these followings because they did so well, and they're saying weekends are going to sell here. You got to hold strong, right? And so you just see all this stuff on Twitter and crypto YouTube. Holy smokes! just, yeah,
Special
best
place there,
advice,
isn't it?
stay away from crypto YouTube. But I have them to thank for Hashflare and BitConnect. But so I ended up, not sinking in and like, okay, maybe this isn't going up. Maybe all these coins are going to continue to go down for about 6 months, so probably mid 2018, I was still buying stuff and thinking, these are going to go to the moon. They're going to continue. They're going to be the next Bitcoin, all this. So,
So
yeah,
yeah,
it was a while.
yeah. So you spent 6 months of it going down almost all of the time,
Yeah,
thinking, hey, this is new paradigm. This is just a dip. Everything will improve.
sure.
And you said by the time you were about 6 months in, you started having the doubts of whether it would come back, or mentally, how did you deal with that? Did you try to capitulate and start over? Did you just average down? Did you rotate what projects you were interested in? Like, where did your brain go as things
Yeah.
started to settle in that it wasn't everything you dreamed of and everything you experienced in those first few trades?
So I knew that there was something here, right? I knew that this was, we were on the verge of a revolutionary sort of monetary and technological innovation. I got into the wrong time in the market cycle, and I didn't understand market cycles. I didn't understand trends. I didn't understand seasonality, any of that. And so I just DCA'd, on just about everything until I ran out of money, right? And so, the best thing I could have done was just to save my cash, and then when Bitcoin hit $3,000, buy the crap out of it and then go from there. But I didn't. I was just, because I knew it, it was something there. And that's the thing you don't understand, is that if you have to think about the long term, what's your investing strategy. If you don't know what you're doing, then you can't just hop in and be a trader, because there's so many things to think about. And I'm a long term. I don't have a ton of time. I have my own job, other values in my life. And so, I thought I was a good trader because I made all this money in the beginning,
Yeah.
which made me think that, okay, I can do this. But it's an entire discipline. It's an entire skill set. There's so many different things. There's all sorts of different ways you can trade and different niches that you're good at or bad at, and you have to know yourself. And there's a whole lot to it. It's almost like you need to go to a training, school to
get
learn.
get certified or something.
Yeah, I learned in the school of hard knocks, bear market
Yeah.
2019. And so, I just DCA'd on all this stuff. And I still have bags. Of course, now I can't get any of them off of the wallet because Ethereum's so expensive, so I have all these bags that are less than a gas fee would be to get them off. So,
Yeah.
luckily I knew there was something there, and I humbled myself enough, 6 or 8 months in, like, it beat it out of me. Okay, this is something that, you can make money at, but it's a skill like anything else. And I just need to wait for the market to turn around, and just, slowly buy the things that I know are going to last, not like Verge, but like Bitcoin and Ethereum, just sort of dollar cost average those as they go down, and then wait for the next run.
So at some point you made the valuation transition in terms of what was just hype, or vaporware, or didn't have real products yet, versus what you thought would last. And you came down to the conclusion, I guess, that both Bitcoin and Ethereum were things that could last. Did you have like some favorites that you either kept averaging into, where you feel like you made a mistake doing that? Or were there some where they paid off? Like maybe they're starting to come back finally, and you did hold on? Or was it the type of thing where you have this huge sigh of relief because you finally rotate out and it's just over?
Yeah, I think I do have a few random coins that are starting to come off the bottom. But I mean, a lot of it, and the thing I did learn eventually was that just because a company has a good mission statement, that the company does well, doesn't mean the coin's going to go high. So I think, there's several that have innovated and done well. I had ZRX from back then. I had some Litecoin, of course. I'm always going to own a little bit because it's just nostalgia's sake, right? Because that's where I got started. But that's doing well, but I have some ICX. But like I said, I have a ton of bags, just like crazy amount of random things that just went to nothing. And so I don't have a ton of yeah, they're just zombies. I don't have a ton of dinosaur coins. I think Kobe tweeted some about Sin yesterday, and I got a nice bag of Consensus sitting there somewhere.
So you got,
but
you got, what's that term? You joined the club, the Sin Club.
oh yeah, yeah.
Pretty much
I'm a
everybody
bag
did
holder.
in early 2018. Kind of realized that like it doesn't matter who promotes it. Even my friend Crypto Cobain, he was really into it and he lost just as much as everybody else on that. I think the difference sometimes that people run into is that for him, even though it was a significant position, it was a position he was able to lose, right?
Right.
Like he knew he could afford to lose that, and he did.
Right.
For a lot of people that are digging into it or following a call, it's easy to put way more than we can afford to lose on that singular position.
Sure. Well, I mean, the dream is to just dump a bunch of money into one coin and for it to, to go all in and then you go 100x, right? That's the dream.
Yeah.
But ultimately, there's 100 of those that don't, and then there's one that does. And so it's just foolishness and arrogance to think that you're going to pick the right one. And I lost a bunch trying to do that. And,
Yeah.
and again, it's like term, right? It's like, how long are you going to invest for? If you're going to invest in a short term, then yeah, you can buy some of these vaporwares. And if you know the market, you know what it's looking for and what the speculation is driven by right then yeah, you can make a lot of money on those. But if you don't know any of that, then you're just going to be a bag holder,
Yeah. So you eventually learn that there's really only the pump on that particular coin if you're going to pay attention to it. So you stopped having this desire to like be a lifelong holder of XYZ coin, and you focused on Bitcoin and Ethereum. When did you feel like you learned enough and you like put your 10,000 hours in, or whatever you want to call it, to where you felt like you started to grasp the market a little better?
Yeah, probably about last year. Of course, I kind of got over my initial feelings of being amazing trader, and it sunk in that I was just going to lose everything. And so then you kind of have to take like a few months of, licking your wounds. And then I sort of came back and just said, I'm going to listen to podcasts. I'm going to read books. I'm going to look at tweets, and not just see the tweets that are shilling their bags, but like the tweets that are giving information on how to trade and what to watch out for, and all the stuff that people were saying back in 2017 that I didn't listen to because I didn't want to be that guy with weak hands. I was like, okay, maybe not all this stuff is important, right? Risk management is the name of the game, right? Rule run, don't lose money. And I didn't care any of that. I was like, well, all these people are making money, so why can't I? And so it probably, I started feeling, probably about after a year of just that, of listening, to what Bitcoin did, even though, there's some maxi stuff in there that I'm not quite into,
Yeah.
but there's great information, and I listen to all of them from the very beginning. I listen to every single one, your podcast. I've listened to all these, just learning about the space, learning what stage we're in, what's the macro environment, what does the market need, and all this kind of sort of FA stuff, even though it's a little different than FA in the stock market would be, just probably about a year ago, I suppose, maybe a little bit before, I started feeling, after about a year and a half of study, like I understood it enough to start averaging back in.
Was a lot of that purely deciphering like what's signal and what's noise? Like you talked about people just pumping their bags, or they have one so they shill it, and learning how to filter that out versus the psychology of trading and some of the stories that people would talk about in terms of how they learn to be better traders.
Yeah, I mean, ultimately, a chart is not the logic of a market; it's the emotion of a market, right? And so you can kind of tell whether someone is sort of emotionally pushing something that they have, or whether they're speaking like, hey, here's what I think about this, take it or leave it, do your own research, and then be able to do your own research. In the beginning, telling me to do my own research was pointless, because I'll go look at the website and be like, that looks cool. That's my research. Let's do this, and that's not that's not research. And so being able to do enough research where you're investing in something that is actually going to be beneficial, and knowing who to follow, sort of curating the voices you listen to, because the fact is most of us are not going to understand the technology behind all this stuff. At least not, I don't understand half the technology, but what I do know is enough about the space, enough about the tokenomics now, enough about, the market cap, enough about the team and what to look for, enough about who to follow, curating the voices that I listen to, so that I hear from the right people, follow the right people, and that are trustworthy, not even that, I mean, someone can be wrong, right, about a bag that's good. But just, being able to, yeah, exactly, filter out the people that I don't believe actually are trying to be helpful to the people that they're speaking to.
Yeah.
and
I guess
understanding it
there's a
better.
difference between the like Ripple's going to $589 type of narrative versus
Yeah.
here's some coin. I may not believe in it, but I think it can go up 2 times its current value or something like that.
Right. And giving reasons for it, and, tweeting about the stuff that, that goes into why they are interested in it. Like Messi's streams are great. And that he was talking about Rook the other day, and he went through a whole deep dive for an hour and why he thinks this is valuable and why the space needs it. And it's super helpful.
Yeah. So do you consider yourself an active trader today, or do you mostly play, longer time frames, trying to balance that with a job? I mean, that's the vast
Yeah.
majority of us are trying to balance this stuff with a job. So how do you do so now?
Yeah, I mean, I'm all about like thinking about what really matters to you, and my job, my calling is way more important to me than trading, even if I can make a lot of money in it, because that's where the joys of life come from, is your family and your day-to-day life, right? You can get addicted and into the space, and even if you're good at it, it's not worth it, right? You have a life to live, don't waste it. So I think for me right now, I've probably made maybe 5 trades in the last like month or two. But that's because I positioned myself, which has been good for me gas fee wise. But that's because I positioned myself a couple months ago into what I wanted to be in. And I sort of felt like this is, this time. It sort of feels like before I got in 2017 in the market cycle, sort of feels like this is the space where things are ramping up, but we haven't, begun to come up yet into that, late 2017. We haven't even approached the sort of feel. And of course, you can only go so much by feel. But in DeFi season in September, I did a lot of trading. At the end of the summer, August, September, I did a lot of trading then. And so I sort of got the bags that I wanted, that I trusted, that I believed in. And you have to have that conviction. I'm a long-term trader, right? I'm not a day trader. I want to, because again, it's a matter of time. You got to think about how much time you have. You can only take so much time to do trading. And so even if you're great at it, if you don't have the time, then you're not going to be able to get in and out of things that you need to get in and out of. So I'm a long-term. I don't want to hold something for a day or two and try to hit it at the right moment and look at indicators. That takes a lot of time that I don't have. And so, I do more research before I buy something. I make fewer trades, and I've been a lot more profitable than I was, even in 2017.
Yeah. How are you planning? This is something I run into because I'm mostly a swing trader, but I do end up taking a good number of trades. But I'm not like intraday scalping on leverage, which a lot of people do,
Right.
or, even if it's not with leverage, I could be, there's not often times where I say, here's my single day or like same day trade idea. I'm more in the, maybe this will take 3 days, maybe this will take 3 weeks. The longer period of trade for me in a swing trade is maybe like 3 months.
Mm-hmm.
Is that a similar window for you, or are you looking more like this is something that I have enough conviction in fundamentally for some reason why it's going to gain market share, and then also timing the cycle, because it sounds like you figured out a little bit of the cycles between alts and Bitcoin and all that kind of stuff, to say I will hold this for 6 months and it can just be a thing in my life, but not like take over my mind all the time. How do you look at it?
Yeah, I sort of be, sort of your time frame or a little longer. Sort of some bags are one, some bags are the other. Like I have some that like I believe in. That the token gives me some utility into their, organization, and so I'm going to hold that and be there for a while. It's going to be sort of equal to Bitcoin and Ethereum, if not just a little bit less conviction in those. So, but yeah, I know I definitely do some swing trading and stuff that I, believe in enough. But once I can take profit, I'm going
Believe
to
in
take
enough
profit
to
in it.
sleep in it, but you want to take profit
Exactly.
if
Yeah.
the profit
Yeah.
comes.
Right. And stuff, not, like Bitcoin, I'm just going to hold, right? I mean,
Yeah.
I'm just going to like, that's what I denominate my portfolio in. That's what I'm trying to gain. And so, because I know it's going, it's going the distance, it's going to revolutionize, I believe at least the financial world. So, even Ethereum is a little less than that, although I'm not a maximalist. So I certainly think there's value in Ethereum, but, I have, different bags that are for different timeframes. And right now, more heavily weighted. Like in DeFi season, I had a lot of bags that were just like, I'm gonna sell this tomorrow, probably.
Yeah.
That's my goal. But that was, you got to know the season, right? You keep doing that. I did that for a couple weeks too long, and I lost some money right there. So
And
so I
at the
think
time, a lot of us that were, maybe you were just getting into DeFi for the summer, I was doing that too. And it's like, I didn't know Aave was a market leader yet, or I
Right.
didn't know like Synthetics was a market leader. So I was less comfortable being in a position even for like a week at that time because I didn't know when the music would stop. But I was fairly certain that what we were experiencing was temporary at the time. Um, so yeah, is that something that you kind of got an idea of at the time, and now you've learned more about the projects that you'd feel like you can hold some of these, like maybe DeFi blue chips a little longer?
Yeah, I mean, I think, I'm still not as engaged constantly in the market and in the spaces as I could be, right? Knowing everything that's happening, all of the news, all of the projects and products that are going on. And so even I have to have somewhat of a humility to say, I don't know enough about this. I'm going to be a little bit more cautious. And so, trying to, I used to think in the beginning, my philosophy was you can make less money holding the things that are more stable, and you can make more money with the stuff that's just popping up or that's more new or whatever. And the fact is, yeah, but you can lose just as much money, and
Yeah.
if you're not fully engaged, then you're going to lose money. It doesn't matter, like you're just going to hold something too long because you don't know what's coming and what are the dangers of it, and what speculators are thinking. You're not and even that, trying to trade based on sentiment is really really hard anyway. But you have to be super engaged in what's going on in the crypto world to know what's hot, what's not, when it's going to stop. It's a game of musical chairs, like you said. And I've definitely lost plenty of money staying on that in that game too long. And so,
Yeah.
I've
A lot of the
learned.
times I noticed this, and I think I'd like your confirmation of how you experienced it. When you're like seeing a chart from someone, you see like here's the risk reward of this trade, but you don't necessarily know the time frame that they're considering that in. And then a
Mhm.
lot of people, I think they tend to follow or to take part in a trade because they're looking almost exclusively towards what's the reward side. Like this thing can go up 2, 3x, but they tend not to be disciplined if it hits through the risk side, right? If you take a 15% drawdown and that's what the risk side was for where this trade idea was invalidated, well, that's where you got to like cut it and move on to the next trade.
Yeah.
Is that something that feel like you've better learned how to do, like just letting go of a project if it invalidates the idea?
Yeah, I mean, I certainly didn't know what stop losses were when I first joined, and now I certainly use stop losses a lot of times. Although, even I think again the trend is probably, I've learned how important the market trend is, because on Ethereum's run, right, I bought it at like 400, and got stopped at 300 when it dipped right before it went to 500,
Yeah.
and then same thing happened to me again, and so it's sort of like the trend. They used to say the trend is your friend, right? And I was like, oh, that's garbage, but it's true, and you have to be careful about that and understand those sort of things. But absolutely, there's things like Ethereum and Bitcoin. I can hold those without a stop loss, low leverage, right? Without a stop loss, and not worry about it. I've traded Ethereum all the way up with like a 3x, and it's drawn down 25% and then gone back up. And I've slept fine at night because I know it's all about time frame. And like people tweet online, people tweet on Twitter, and they're like, hey, I bought this coin for this amount of money or whatever, and I think it's going to go up. And they don't tweet when they sell it because it's invalidated, and then you're sitting there holding it. And so you have to understand your own risk tolerance and time frame.
Yeah,
And
and
so
making your own decisions for how, if you choose to copy trade someone, you're still
mhm.
making your own decision to participate in that same idea, and they're not going to press the sell button for you in that
Right.
scenario. If you're making that trade yourself, then you're the one that has to sell it, whether it's to take profit or to cut a loss.
Right. What's the whole crypto thing? Is taking responsibility for your own financial well-being. And so a lot of us, we just want to, we want to just copy trade a guy's tweet and make a bunch of money off of it and then call it a day. But but you got to take responsibility for your own business. And there's people are tweeting constantly. You don't know the motivation behind it. So why you have to curate your voices. But at the same time, yeah, you don't know their risk profile. You don't know their size. Even they could be doing that for $20 and just tweeting for the lulls, And so
Yeah.
like you have to think about your time frame, and you got to understand the project yourself, and invest in less things, but things that you believe in, things that you have conviction in. But again, conviction is time constrained. I can have conviction this is going to go up in the next 2 days, or this is going to go up in the next 2 years.
Yeah.
and invest for that.
That's actually something you brought up about time frame and size. People definitely have huge variances, even if they're like if they're for real. A couple that come to mind. One is Gainsey. Like Gainsey tweets all the time. I don't know if people follow Gainsey. Tweets all the time about taking a trade or doing something. But it's important if you're just a new person following someone like that to know what are they doing. And someone like Gainsey, he might be trying to get 3 or 4% upside, and he's cutting it if he loses like a couple points on it, right? On his P&L leveraged. So like basically cutting it just below break even or something, or like barely underwater. And so if he says, okay, well, I think Ethereum's going to puke here. Well, that doesn't mean like your year-long bull market thesis says sell your spot Ethereum. It just means he's thinks it's going to go down, and he's in this tiny time frame, higher leverage with a lot of size that can end up in nice rewards for him. But that's a completely different mindset, a completely different trading style than someone who is trying to be more passive in the market. They have a job and a life, and they're like, oh, well, I'm bullish Ethereum. I think it's going to $3,000. Well, you don't puke your Ethereum because like someone you saw on Twitter says they think it's going to go down in like the next 30 minutes.
Right. Yeah. And and it matters, like I said, like you said, time that you have to spend babysitting it, and also the position size, so if you have, and what leverage, of course, right? If you have a big position, you can use no leverage or even, but you can make 5%. If you make 5% on $1 million, that's a nice day, right?
Yeah.
But making 5% on $10,000, that's, might not be worth your time.
Right.
And so, everyone's got a different style. And this is why you got to limit the voices, curate who you're listening to, know what they do. Like I know you're a swing trader. You're not usually trading something to sell it again in an hour at 100x leverage, right? You may do that I don't know, but
no, I haven't even traded leverage, and I don't even know how long, and that's, and honestly, I want to get your inputs on leverage too. But yeah, that continue on.
Sure. Yeah. So, I definitely have tried leverage before. I thankfully limited the amount. I decided I was going to spend this little amount on, high leverage and see what I could do. My first trade, it went up like 75%. I think it was Tron. It went up 75%. And like, I think I was doing 50x leverage or something, and just to play around with it. And so, and it went up, 75% in like 2 minutes. And I was like, this is amazing. And then it went back down to even. And I was like, well, I can't sell it for break even. It's just a crash course in psychology and what not to do. And then, I was like, well, I guess I'll sleep on it. It'll probably go up, and that, of course, I was liquidated like an hour later while I was sleeping, and so I just decided I don't have the time. For that was the most stressful hour of my life. And so, I was just like, this is not for me. And it was good that I limited the amount of money I was willing to spend to learn that. But you have to know what you're at. And so for me, I'm comfortable because I believe that this is, the massive bull run. Everyone was saying that 2018 was going to be after 2017, but it took 3 years to get here. And so I have low leverage because I want to make more than I have. I want to end up not only with a higher, dollar worth of Ethereum, but I want to, I want to have more of it. And so, I tweet a lot all the time when I'm buying Ethereum, and I've got a, 3x leverage on it because I believe it's going to go up. I don't think if it goes down, it's going to be more than 30% now, and so, anyway, so it's all about the philosophy, how much time you're willing to spend babysitting it, and the time frame you're thinking about, because, it's not worth the stress. Again, it's about living, like the point of money, the money can be a good thing or a bad thing in your life. And so if you're trying to make more money to make your life better, you focus on your life instead. Money's not going to help you. So, if you think about it in that terms, prioritize what you value in life, and then you won't over leverage yourself and then potentially lose it all.
Yeah, you're actually psychologically, I think you're stronger than I am, because honestly, I don't even like having 3x leverage on, unless it's just I have so wide of a gap between like where I would get smoked on it, to where I just feel comfortable in these markets being unleveraged almost all the time. Very rarely do I take leverage. And when I do, I tend to like you said, like I actually tend not to sleep on it as well. Like I'm going to watch it way more closely until I feel like that position's safe. Even if that position's safe, let's say, you long Ethereum at $1,000 and then it gets to 1100, then I'm constantly saying like, okay, well, should I take profit here? Even though I think it's going to all-time highs. I think it's going to 1600. Should I take profit at 1100, 1200, 1300? Now it's unrealized gains. Is it going to like go back and take it all away? And you have to find out, where are you personally comfortable enough to either cut it for a gain, cut it for a loss, or ride it all the way based on your broader thesis. So the point that you've gotten to is actually extremely impressive to me, that I don't think most traders ever do.
I think something important especially for new people to remember too, is that you don't have to ride something all the way up, right? If you believe it's going, if I believe Bitcoin's going to $100,000, I don't have to ride it from 20 to 100, right? I can, and for Ethereum, it's going to have these massive drawdowns. We just know that. And what happens is people get caught up in the FOMO and they think that it's just going to go up and they're going to get lost. And then they don't buy it when it, then they panic sell it when it goes down. If you've bought Ethereum when it has, or Bitcoin, when it has drawn down 25+% in this bull run, and then just rode it until you were like, holy crap, this is awesome. You've made tons of money, right? And so that's a win. And then you can sell it. And then maybe it draws down to when you sold it, if it keeps going up or not, but it doesn't matter. You don't have to ride it all the way up, and then you can just stack sats along the way. And so I'm always long Ethereum and Bitcoin spot. But my leverage is it also matters when you buy. And so if my leverage is purely when I see a big drawdown, my risk reward goes way up. And so I can buy it then, and you don't have to get in right away. And if you're worried about it, get in right away spot, just so you don't miss out if it does go high and you're in, but don't spend all your money doing that. And that's what I do. I use my Ethereum and this may not be the best idea for everybody. I use my Ethereum as collateral for my leverage, longing Ethereum, right? So I'm essentially doubling that money, which means that, when it goes down, my cost basis goes down. And so it's more likely to be liquidated. Collateral is going down. And so, so that's more risky. But again, if I leverage it when it's already drawn down 25 to 30%, then there's virtually no way, especially in this bull market we're in, that I'm going to even approach liquidation. And so with those, you have to have a plan, you have to have a strategy, things to minimize your risk. And if you have those kind of plans in place, then you may not make as much money as the guy that just happens to YOLO long, XRP at 18 cents 3 months ago and rode it all the way to, 80 cents. But there's a whole lot more people that lost a ton on that. So, you have to understand you have to control your own emotions. Essentially, again, the chart is not a lot. It's the emotions of the market, how the market's feeling about what will happen, not necessarily how they're thinking about what will happen. And that's a big distinction. And you have to control your own emotions or you're going to get caught up in it.
Yeah. All right. So let's go to, you've got this experience, right? Where you don't have to tell me if you don't want to, but a lot of people I know, they were down 80% or 70% of their initial capital and maybe 90% of their unrealized gains because they were, like you said, up and then way down over the course of the bear market. Either way, I know through that period and holding and averaging in and all that, you lost a lot of money off the top at least. So psychologically, you have that in your past. You learned from that experience, but now you have this bull thesis again. Feel like we're in this bull market. How are you trying to approach take profits this time in a macro sense, not just the individual trade, like take profit on that margin trade or rotate from an alt back to Bitcoin or something like that? How are you approaching, okay, this has been good, this has been enough. Are you planning to take your profits on the way up, or are you going to try to time, I believe this is the top and I'm top ticking it, or I'm going to take profit because the tide is starting to turn and I'm down a little bit, but I'm going to get out now? How are you approaching your plan there?
Yeah, that is so hard to do, right? It is so hard to take profit, especially when you're seeing everything go up. I've had days where it's gone up 10% at a time, over the last couple of, weeks. And so I'm probably up 2x on my whole portfolio in the last 2 weeks, probably. And so it's like so hard. Like, what do you do? Because then it minimizes your ability to make more. It is so hard psychologically, but it is so important. And I'm definitely taking profit on the way up. One of the things I never did before was I would just ape into something all in. I want to spend this much money, I'm going to go, rather than ladder in and ladder out. And it's more, it takes more time. It takes a lot more discipline, but you make a lot more money. If you ladder in and ladder out, you minimize the amount you could make, but you really minimize the amount you could lose. And so I'm definitely taking profit on the way up, and I'm taking about probably half of it into stablecoins on BlockFi that are yielding high yield, and then I'm also probably taking half of it and putting it into Bitcoin. Sometimes I'll throw some into Ethereum. Like I said, I'm always spot Ethereum, so I have plenty of that. So that's what I'm doing, because I know, I have conviction in the long term of Bitcoin, but at the same time, you never know what could happen. And so I want to, if everything goes to zero and I could just take out my USD, I want to be like, that wasn't worthless. And so again, psychologically, it feels like I want to buy in as soon as I make a great trade and take profit. 5 minutes later, I'm like, I'm a genius trader, I should put this back in. And so again, you have to be controlled emotionally. And one of the things that because I have a family, and so I like to show them that, this is a good use of my time, and that I'm, semi-successful in this. And so I do like to take some out purely to show them, hey, why don't we go skiing this weekend? Why don't we go, spend the night? This is on, my time I spend doing this. And so having those tangible things that you can take out, it's taking profit in a sense, even though you're not putting it, away, but you're actually using it to enhance your life, which all of this is about, your ability to enjoy life, be blessing to others, and all that. So,
did you take any profit in those early trades in late 2017, early 2018 to do similar, or is this concept of paying yourself based on your experience before?
Yeah, absolutely. I did. I totally didn't. I could have, I could have walked away 2 weeks after I first got in the market with like, an amazing 50x, gain, and been just absolutely, stoked about it. But I didn't. I took all that and I reinvested in a bunch of stuff. And then I was like, okay, that's going down, but if I put in more, then I can make, and so then as a dollar cost average over the next year, I don't think I got -80. I certainly have lots of negative 99.9% bags. But I was more fortunate than others. I still had powder that I was putting into Bitcoin, Ethereum, these things that I knew would come back, even though it was on the way down. But so that worked out in the long run. But no, I had no concept of taking profit. I was way too immature emotionally when it comes to trading. And again, it's not just maturity in general, but it's when it comes to trading, are you emotionally mature enough, self-controlled enough to be able to have a plan and stick to it whenever the time comes where you just want to ape into something? And so I've definitely benefited from that. And what's funny is, if I'm taking profit, and so now I have a stack of stable coins. I don't plan on spending it, but if Bitcoin draws down 40% or something,
you might.
you better believe I'm going to buy it, right? Because I know it's going to go up because I have that conviction. But again, that's part of my plan. It's like the caveat in the bottom, like take profit here, roll some over here, but asterisk to the bottom, if, the whole market, draws down this much, I'm going to be really happy I took profit.
Yeah. You won't feel powerless because you don't have anything that you can actually do after that drawdown. That's something that Sakaria said in an interview back, I think in 2018, we were talking about his, strategy throughout a bull market. And I've always taken that to heart as well, to always have something where I can fall back on to be able to buy the dip. Because what you do is, if you don't have any money left to buy the dip, when you feel like, when you wish you did, you can end up having this opposite desire where you end up saying, well, maybe I need to just capitulate now because I think it's going to go down further. But mentally, if you would instead sit there and think, okay, what if I did have, say, 30% of my portfolio available to buy this dip? Would I be buying it right now? But instead, I'm capitulating it. So, like, which one is psychologically the right answer here? We got a good note. E-Man in the chat said that it was interesting that you talk about laddering in. He says Trader Dante, who's someone I can is more of a Forex person, but a good teacher.
Oh yeah.
says if you believe in your thesis, you don't scale in. This is a good example in my mind of very different trading strategies. Usually when you're trading Forex, most of these Forex traders are trading pretty low time frames, very high leverage, and tight stops. So if you're laddering in, even people who do ladder in, maybe it's like one extra buy, and it's like 2 bips away from the first buy, and then they stop out 5 bips later. And
Right.
that's what it means when they're talking about conviction and not laddering in. If you're
Yeah.
in a swing trade, if you think, okay, well, here's Ethereum relative to the 50-day moving average, well, you might choose to make your first allocation when it's like a few percent away from that technical or level or whatever you had in mind. So you choose to deploy some a little early, but you're also willing to deploy when it gets actually all the way to your target, right? Um, and then is that essentially how you look at laddering into a trade?
Yeah, I mean, it goes back to what we were saying about the time frame and your trading strategy. If you're trading purely off of TA, which is a fine way to do it, it takes a lot. You have all these indicators, and you have to know exactly what the market's probably about to do. If you're short time frame trading, and so yeah, you can buy when you need to, but the fact is, so let me just say, every single time I bought Ethereum, it's gone down every single time, right? And because it's just, and I don't know why it is, but every single time I bought in this bull run, it's gone down, but it's gone down 10 or 20%. And I haven't bought in all that I've wanted to. And so I've had more in order to buy. And then it's gone up because I have conviction in it. And so I'm not trading, some Forex currency that I don't know what it's going to do, and so
Yeah.
I'm
So
trading mostly on FA rather
the
than
way
TA.
you're trading is based on fundamental analysis, and
Right.
more cycle analysis of where you think we are in the cycle. For folks that are joining us, this is AltgoinOG, and he's given us more of the perspectives of, especially as a new trader at the end of the tail market previously, but this is now, second rodeo. So what he learned, but still, it's not like you're trading full time. You have a job, you have a life and a family. So how do you blend all that in? Because I think that's the thing that I find interesting about this. This is 95% of our listeners. It's very difficult to just pay attention to this market all the time. So how can we be profitable? How can we approach the market in a way that doesn't require 100% of our attention? So that's,
Yeah. I mean, it's all about boundaries, right?
yeah.
It's making a strategy in life, just like you make a strategy. It's about discipline in life as it is discipline in trading. It's boundaries. Here's when I'm gonna, look at this. I have this amount of time, and then that'll sort of tell you, like, how much time do I have to spend on this. I have, an hour every day, before my family wakes up, or I have to go to sleep, or I have, a few hours on, once a week, or maybe you don't have a job, or you have a job that gives you plenty of time. Then you can sort of build. I feel like you think about your life first, and you build your trading strategy sort of around how much time you have to spend, not only developing your experience and your skills and your awareness of what's going on in the market, but also how much time you have to spend to babysit it and know what you're doing.
I've never sat down and done this, but I've always wanted to run a portfolio where I only made adjustments on Sunday nights, right? So like before the market opens, it's kind of before the work week starts and all that, and base everything off of the weekly close. So I'm in Central Time, so I get a weekly closing candle Sunday nights at 6 p.m. So my thought was, what if I do an analysis of what happened in the last week, sometime a couple hours after close, right? And then make all of my decisions. Where is this trade invalidated? Where is this trade telling me to enter? Is this one a hold, a taper off, ladder in? What decisions can I make? And then based on that, structure that portfolio so that you can make all the adjustments for the next week in that same session. You look through the charts, you set bids for where you want to enter one thing, where you want to take profit on another thing, where you might set a stop loss automated, and do all these decisions. I actually think doing that with one chart session per week and having kind of these preset rules that you're going to do, most people would probably be more profitable doing that than if they stare at their phone looking at hourly candles all the time.
Oh yeah, absolutely. Right. Taking fewer trades has been amazing for me, but also knowing I don't have all the time. I mean, you go down the rabbit hole in the beginning, especially when you learn about Bitcoin for the first time. I mean, gosh, you just get lost in it, right? Because it just seems so revolutionary, which is great. And you're right, the technology is. It doesn't mean the coin's going to go up tomorrow, So, so taking fewer trades and being more cognizant of, what kind of trading strategy you're in. I don't even have time to do what you're doing, right? So I don't buy some stuff that you're buying because I don't want to sit there and babysit I don't want to have to sit there and put in the stop loss, study the TA, learn the indicators and all that. I've spent lots of time learning indicators, and I actually did okay scalping. I just didn't have the time. I could scalp it, decent leverage and do okay, but it just takes time that I don't have and I don't want to spend. And so, it's more valuable to me to spend my life doing other things that are valuable to me than it is to make more money doing scalping, but lose in my real life. And so, I think that you have a everything's a cost benefit, right? And you have to understand your own situation and your own trading strategy.
Yeah, I have a lot of trades where I honestly, I share a lot of the trades that I do on Twitter, but there are times where I'm like, I'm looking at this like 1 hour consolidation. I could be out of this trade in like 4 hours or less. And sometimes I just don't even share those because I'm like, the typical person that's paying attention to this, the last thing I want to do is be bullish something because I think it's got this 1 hour consolidation and, I plan to be in and out of it inside a day. Well, if they come read like my tweets or like something I'm talking about the next day and they're like, oh man, I bought that because you said you liked it. And now today it's down 20%. Are you still holding this? And I'm like,
Yeah.
oh man, I'm sorry. Like that's not my intention. And I think that's a lot of people get confused between the time in the market, the scope, the time frame of the trade, and the target of what you're seeking out of it. And I think if we get people in a certain mindset here is it's to try to consider those things when you're following someone, even if you're listening to a podcast, watching a video for a setup, and certainly if you're like following tweets about people's calls about some ticker. Consider those things and consider how it relates to your setup, your situation, and what you have both the capacity to do, the willingness to do, and the ability to even fit into your life. Because it makes a huge difference in terms of whether you'll be profitable, even taking those ideas into account.
Yeah, I solved that problem on Twitter by not being worth following and not having any followers. So that way I don't have to worry about people copy trading me and doing what I do. But yeah, so I certainly agree. And then people coming out, see a guy saying, he in the chat, he's got, he's watching with a newbie, doesn't understand the word. And if you don't understand what we're talking about, and we're being pretty basic, but if you don't understand the basic terms, the basic psychological phenomenon that we're talking about, the charts, the indicators, all this kind of stuff, if you want to be in, that's fine, but just dollar cost average, right? I think everyone should own some Bitcoin. So
Like
I
the
can't say,
larger
hey,
cycle.
wait, because I don't know what's going to happen. Yeah, exactly. And so, going back to what we were saying about before about, aping everything in, I don't know what, again, like I said, I every time I buy Ethereum goes down, but I just know it's going up. And so I don't want to be out and I might not want to be all in. And you really don't usually, at least my trading strategy, I don't want to be all in, but I don't want to be totally out either. And so, I buy a little bit. And so, again, take your voice, curate your voices, figure out who's tweeting and why. And again, I mean, of course, you can't copy trade anybody. Again, do your own research, do more study, do more learning, and less trading has been profitable for me.
Yeah, we got a question from Master Mojo asking, which stable coins do you like getting yield from, and where do you try to get yield from them? I want to rephrase this question. We talked about the value of sometimes having some money put aside in stable coins. Some people, they're just always going to want to be exposed to Bitcoin. So like maybe for them, that's saying, okay, if I'm like 30% in alts, I want to be 70% in Bitcoin. And every now and then I'll use some of that Bitcoin to buy blood and alts if they lose relative to Bitcoin. Other people will say, well, I want 20% or 30% in USD of some fashion. And I'm going to use that to deploy and do these things. In the modern landscape of DeFi and yield farming and all this stuff, you can actually make use of Tether and DAI and some of these stable coins to go earn a yield. My first question is, are you doing any more passive yield farming type of stuff? And then to answer the question directly, I think most people are not going to be able to put enough stablecoins in yield farming in order to make enough if they plan to use that money to do anything. Because if you have to pay like $100 to like deposit your stablecoins, maybe you're earning 10 to 15% per year, which is great. But then when you move it out, you're going to pay another $100 and deploy it. By the time you do all that, you're probably using all that yield. But are you doing yield farming more broadly, Brad?
Yeah, I think so I am doing a little bit of yield farming. I certainly did a lot in DeFi summer last year, but I definitely a lot of times lost money trying to, by the time you approve, stake, unstake, especially when Ethereum is congested,
Yeah.
you can lose more money than is worth, and I'm not a big fish, right? I'm a small fish. So, so I had to be careful, cognizant of that. And so I certainly chased some of that because the APYs were just ridiculous and you try to get in early and all that. And, so I think I made out okay. But definitely there were some times where it wasn't worth it. And so I think for me, I just like to have a little bit everywhere. Like I want to have, all of my USD, I usually use USDC. I want to have it all. You getting whatever. I'd love to know from you where you think the best place to stake it is. I've got mine on BlockFi because it's more of it's not a regulated company, but it's more of a trustworthy place. It's lower API than I could get elsewhere, but it's also, I feel like, more secure a little bit. And so, but I also have USDC, in my Ethereum wallet for buying stuff. And I have, I'm farming a little bit right now. I'm mainly farming DuckDAO. If anyone has followed me, they know that I tweet about that all the time. Just like.
But that's more like a lower cap speculative farming play, right?
So I'm not quite sure what the market cap is currently. It's a lot more than it was when I bought it,
Yeah.
a while back. But they're basically a pre-sale, group, right? They incubate projects. They're a pre-sale incubator. So they find these projects and they help incubate, launch them. And so they give you, based on how many tokens of theirs
but
you have.
But you're getting
you
yield on a token, and
right. They do yield farming also.
Yeah, but that's almost all of those are much more speculative, and you end up with a higher APY that might be worth those fees and stuff. I think most people, if you're looking for stable APY with a stable coin, you just have to be moving. I mean, I know people that do this with like 7 and 8 figures in order to justify what they're getting. Like if you're getting like 15%, sure. I don't think I put enough money into the market personally to justify most of the staking opportunities that exist. Every now and then, like a coin like Badger is a good example. I'm bullish on Badger, the actual token, at times, and the yield on Badger itself is like 100% APY or something. So it's worth it to me to go stake my Badger during that swing trade. But if you don't think you can get in and out and earn enough yield to justify the fees, and you're not going to be in that trade long enough to justify it, I just don't bother with it. Yeah. What I've seen the mistake on the other side is I know someone, for example, they held MTA for like 7-8 months of drawdown and they weren't even getting the yield on MTA. And I was like, you gave up. You could have gotten another 50% of the tokens that you had currently through the yield. And some people do, depending on the token that they're in, depending on the tokenomics. If you're going to dig into some of these like very new DeFi concepts, you at least need to know, are you able to get yield or are you the yield? Some of these, the tokens you buy, you are the yield for other people that are doing farming. So it's important to kind of dig into the fundamentals of these and not just like jump right in without knowing anything.
Yeah, we make fun of people calling Bitcoin a Ponzi, but the fact is there are plenty of Ponzi schemes out there. I was definitely a part of a couple in 2017. And one of the guys in the chat asked earlier about how do you get over bear market PTSD? And part of my take profit, even though it hurts to take profit, part of that is because of bear market PTSD. And it's worked out pretty good. And as far as yield farming goes, I certainly have some PTSD from seeking the APYs in DeFi summer, where I would stake something and it would say, it's got a, even so, of course, there were like millions of APY, but even some that seemed like legit, like even Yearn, finance. It was like, stake my USDC or DAI or whatever, one day, and it would say 81% APY. I'm like 81%, that's amazing. But 2 weeks later, it was 7% APY, right? And so like,
because another like
Yearn.
$100 million went into the vault in that time,
right? and that's urine, right? That's like the best, right? Or the most solid at the time. And so, you have to be careful. Newness is definitely dangerous, as you're saying. You have to be careful about seeking those APYs. And for me, I've done it, and I do some farming. Really staking is what it is. But I want to have something that's more stable to stake my coins in for powder on the side or taking profit.
Yeah. All right. So you have seen the I'm a genius early part of the market. And honestly, January, for anybody listening, if you're brand new in January, January is everybody's a genius season so far, or like it's February now. But January was definitely everybody's a genius season. But it's a different type of season than the January that Brad cut his teeth in, because the music stopped after that. This time it's much more of a retail driver. Like the retail now is like, oh, look what they did in January. I'm going to go do that. And I actually think we, from a macro lens, probably have a lot longer of Bitcoin and altcoins to some degree doing some interesting things. But if you just got in January, you made a bunch of money, you're like, I'm a genius. Just know that doesn't always last. In fact, Bitcoin could go up, Bitcoin could double, and your favorite altcoins that you're in could lose 50% versus the dollar. Me and Brad have learned these lessons, So consider that when you're thinking about it and trying to learn those lessons. I want to shift a little bit to when you're talking to those people. This is how I started with that question before I ranted. Your family member or your friend or someone you work with, and they're like, "Hey, I want to get interested in this. I want to dig in." What are the things you tell them that is not financial advice for anyone else, but educational friend advice? What are the things you tell them to stay away from, and how do you tell them to keep a level head?
Oh man, I normally just tell them to buy Bitcoin or Ethereum. And I usually don't. I say, just decide how much you're going to buy and buy a little bit every month. But at the same time, study it, because I don't want to keep people from studying.
Learning it.
Yeah, like that's what you want to do. But the problem is when you invest way more than you should before you understand it enough. Even understanding it now after being in the space and understanding and studying it for 4 years, I am still risk averse, and because there's a whole lot of danger, because there's so many disciplines. I mean, you have the trading discipline, you have the market cycle discipline, you have the seasonality of the macro space, and all the companies that are investing, and all these kind of things. The global financial crisis. I mean, you have all sorts of things that are playing in to what's happening, and so I usually say be more cautious than you think you should, but I definitely don't encourage people to stay out of it altogether. The fact is, you spend more time in stuff you're invested in. So the key is to invest enough where you care about it and you start to learn, but not so much that you're investing more than you can risk with how much knowledge you have.
Yeah, if you see it go down 10%, you don't want to feel like you have to puke.
Right, exactly.
That's a good sign that you're too invested.
I did the calculation over like when I first bought in, and then now, and what the average Bitcoin price was. Actually, I did this probably 6 months ago or 4 months ago.
Yeah.
And the average Bitcoin price was $8,000. And so, I bought, I got a great buy in Bitcoin at 3,000, which I was really proud of. And I still haven't sold that. But had I just DCA'd, I would have had a lot more money in. Have had a strategy of DCAing over that course of that, I would have had a lot more money in at $8,000 cost basis. And so I would have more money, even though I bought at 3,000, I bought a lot at, 16 and 10 and all this. So, so DCAing is certainly a valuable thing, especially if you don't understand it. But I always encourage people, go read books, Twitter's a great place. It can be a really terrible place, but there's a lot of degeneracy and a lot of arrogance on there. People that know what we're talking about, but there's certainly a lot of valuable information. I send them to your podcast. I send them to, what Bitcoin did. Palm's podcast is great. It's a little bit more varied, but there's definitely like, just learn and don't take any, every single person you're going to talk to is still an amateur, because all of this is so new. And so even the master traders are still amateurs in the grand sense. You have to take the meat and leave the bones. But find good voices and learn,
I love that. And I tell people very similar things. Like, my friends and my family get in, usually I'm just like, stick with Bitcoin if you want to be a little more adventurous, maybe buy a little bit of Ethereum at the right times, but try to denominate in Bitcoin and pay attention to your Bitcoin relative value. Most people, I say anything else, like you got to be willing to really step in, get your hands dirty a bit. And I think we'll finish here because our sponsor, Token Sets, they do offer more like passive strategies. So if you're like, DeFi seems interesting, what do I do? Well, there's things like the DeFi Pulse Index. And if you want to put a little bit towards something like a DeFi Pulse Index, then you could just buy DPI and let it roll. And then you get exposure to that entire index without having to pay attention to every single project. Now, are you going to get the same type of gains with DPI that you would if you like spend every minute of your day finding the gems and, seeing them go up 100x? No. But if you time the cycle right in terms of getting into something that's indexed like that, you're going to do pretty well. And your time versus your reward is going to be a much more favorable ratio for the rest of your life, like the way you spend the rest of your life. So yeah, to check out Token Sets, go to ledgerstats.com/sets and check out DPI if you're looking for DeFi exposure. That said, I don't know that like right now is the best time to say I want to chase blue chip DeFi. Maybe it's the better time to say I want to rotate some of my blue chip DeFi gains back to Bitcoin as Bitcoin breaks out or as Ethereum goes into price discovery. Those are decisions you have to make for yourself. But when you're looking to diversify, you can find easier routes. You don't have to dig into the weeds so deeply that it distracts you from everything else. I've run some experiments on my own life in legacy markets and in crypto, and sometimes those longer time frame decisions end up paying off more than others. Brad, I think we'll leave it there. Thanks for being with us. People can follow you at AltgoinOG. What parting words do you want to leave us with?
Yeah, probably worst thing you could do is follow me for your portfolio gains. But no, I don't tweet a whole lot, but yeah, I think I really appreciate your time, Legend. I love listening to this stream. Definitely subscribe or whatever, if you don't already. And yeah, I mean, I think my main thing is to focus on your real life first, right? I think about the people that have invested in, just the indexes in the stock market for 30 years and retired, and they have an awesome life and they have people that love them and they do great. And we're chasing 100 times more money than that, but they have a great life, a joyful, blessing to others sort of existence. And, that's, we have to take that into account, the balance and everything.
I mean, I try to reiterate this frequently. What I try to do in the market and what most of us try to do in the market is we're not just trying to make money. We're also trying to beat whatever the index is. So if you're in stocks, you're trying to beat the S&P 500. Those are the 500 best performing companies in the world by design. If you're in crypto, you're trying to beat Bitcoin, which is one of the most parabolically up assets that's ever been created in the world. And you're trying to do better than that. It requires some hubris to say that you can do that well. No one is perfect at that, and everyone is going to take their lumps. And so a big part of it is to try to say, when can I recognize that I'm not doing it as well as I am trying to do, and step back a little bit and be okay with the passive components, the passive investments, where you put your thesis is more, I'm interested in Bitcoin, or I'm interested in crypto, or I'm interested in DeFi, and less so, I'm going to trade in and out of this stuff all the time, make millions of dollars, be a genius, and turn $1,000 into $1 million and retire or whatever. Like those stories are much more rare, and you have to know and allocate the percentage of your portfolio towards that endeavor to realize that you probably won't do that. Like it's very difficult, but you probably have life-changing monetary gain potential purely because you know about this space a lot earlier than other people know. And in so many words, that's what I usually try to tell people. I've been in the space a little bit longer than you, not that much longer. And I've been trading a little bit longer than that. I'm learning all the time, like all the time. This is not easy to do. There can be a lot of rewards, but staying humble and trying to, be smart about the way we approach the market is always going to help Brad, you certainly helped us do that today. Thanks for being here. Go follow Brad at AltgoinOG, even though he doesn't tweet a lot. It's okay. He does. He still does tweet. He shares his knowledge. I appreciate you doing that. Thanks to Token Sets for being partners with us on this show. Go to ledgerstash.com/sets and check out their passive strategies. We'll talk to you next time.
In the blink